In this video, I'm going to show you an indicator that you can use to identify ranging markets. We're going to show you how this indicator works, the best settings to use, and we'll also combine it with a few other technical tools to create a simple yet profitable scalping strategy. If you find value in this video, remember to leave a like. Let's get into it. So, the indicator that we're talking about is called Range Detector. To add it to your chart, you're going to go to TradingView. Then load any trading security in any time frame. After you have your chart, open the indicator search tab and type in Range Detector. And it's gonna be this one by Lux Algo. The Range Detector is a tool designed for traders to identify and highlight periods in the market where the price is in a state of range-bound movement. The indicator helps traders identify these ranges, and it dynamically adjusts to highlight the extremities of the ranges in real time. Next, we're going to explore how we can use this indicator to trade. But before that, let's take a look at this indicator's components. As you can see here, the moment this indicator identifies a market range, a gray background color is printed. The range itself is this blue-colored zone right here. This dotted line in the center represents the middle point of this range. Now, we're gonna let the market play out and see what happens. Now, as you can see, we have a blue line at the top and another blue line at the bottom. These are called range extremities. This upper line is called the upper range extremity, and this lower line is called the lower range extremity. They basically indicate the upper and lower bounds where if the price were to break above or below, the range would be considered broken. Now, as you can see, the upper and lower range extremities have changed color to green. This is because the price broke and closed above the upper range extremity. We can also see that the range color changed from blue to green. The midline is also colored green. We can also see that the range extremities are extended to the right, which is very helpful because they can serve as areas of support and resistance. Then here, you can probably guess that if the price breaks below the lower range extremity, everything is again gonna be colored red. Let's see if that happens. Now, as we can see, the price came back into the range and then broke and closed below the lower range extremity. Because of that, the range extremities changed color to red. We can also see that the range background color as well as the mid-line are all colored red. This is important, especially during backtesting, because it basically gives you the entire life cycle of a specific range. Just by looking at the colors, you can tell that because the extremities are all colored green right here, that would mean that the price broke and closed above the upper range extremity. When it's colored red, you immediately know that the price broke and closed below the lower range extremity. Then the color of the range itself can tell you where the price is located at the current moment. If the range is colored red, it means that the price is below the range. If it were to be colored green, that would mean that the price is currently above the range. And of course, as you can see here, after the price broke and closed below the range, it did a retest of that range and then created this engulfing candle and another engulfing candle right here. This is a signal for a potential short entry position. If we were to enter a short position right here, you can see that that trade would have been super profitable. And this is exactly how we're going to be using this indicator to trade. But before we get into trading, let's talk about hankotrade. Now, you may be thinking,
and what exactly is hankotrade?
hankotrade is one of the most reliable Forex brokers out there, and for that reason, I use them every single day. As you can see here, this is my trading history. I mainly trade gold, and up here you can see that this is actually a live account. The reason why I love hankotrade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest they can go. For those of you who love high leverage, hankotrade offers a maximum leverage of 1 to 500. If all of that isn't enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500. So now you'll have a total of $1,000 to trade with. To access the bonus, as well as all the other perks, sign up to hankotrade using the link in the video description. Now, back to the video. Now, right here we can see that we have these customizable options that we can change to suit our trading strategy. For the strategy we're going to showcase in this video, all the settings are going to be left at the default values. The minimum range length specifies the minimum number of bars needed to detect a range. The range width refers to the ATR multiplier used to detect new ranges. Lower values result in the detection of narrower ranges, and higher values might lead to false signals because the indicator will be more sensitive to price. The ATR length specifies the length of the ATR value used to determine the range width. Then here we have the option to change the colors of the upper, the lower, and the unbroken range extremities. Then in the Style tab, we have options to toggle the display of all these options. Now, we saw an example of how we used this indicator to take a short position, this one right here. We waited for the price to break and close below the lower range extremity. After the break, we waited for a retest. And then we looked for an engulfing candle, which was our signal to enter a short position. Now, how do we use the same indicator to enter a long position? Well, it's basically going to be the opposite of everything we did with this short position. What I mean by that is this. As you can see, the price was in a range. It then broke and closed above the upper range extremity. Then after the breakout, price later came back and retested that same range. A bullish engulfing candle was then printed right after the retest. This is our signal to enter a long position. And as you can see, this trade was super profitable. But of course, in order to make any strategy extra profitable, we would need to have a trend filter indicator as well as a volume confirmation indicator on our chart. Open the indicator search tab and type in EMA. Select this one right here. And then type in volume. And it's going to be this one by TradingView that's under the Technicals tab. Double click on the EMA. And on the Inputs tab, change the length to 200. Then on the Style tab, you want to change the EMA color to white. After that, click OK. For the volume indicator, you want to double click on it, then on the Style tab, enable the volume EMA and change its color to white. And then click OK. So instead of just entering any long or short positions, we're going to use the EMA as our trend filter. We will only enter long positions whenever the entry happens above the EMA. We're going to enter a short position whenever the entry happens below the EMA. For the volume indicator, we're going to want a candle that breaks and closes above a range to have a volume bar that closes above this white moving average. And then for extra confirmation, we'll also make sure that the entry candle itself has a volume bar that closes above this white moving average. Let's take a look at an example. So right here, we had a long position. Now, the question is, what were the conditions that prompted us to enter this long position? Well, here they are. First, we can see that the range detector detected a market range, this one right here. Next, we want the price to break and close above the range without breaking and closing below it. For that, we just let the market play out and see what happens. Now, as you can see here, the range color is now green. This basically means that the price just broke and closed above the range without breaking below it. Now, for this breakout to be valid, it needs to be accompanied by significant bullish volume. To confirm that, we're going to make sure that this volume bar closed above this white moving average. After the breakout, we want a retest to happen. We again let the market play out and see what happens. So this is the retest of the range. As you can see, after the breakout, there were several candles where the price did not touch the range. And then after about 3 candles, the price came back to retest the zone. Next, we need the retest candle to open and close above this 200 period EMA. This indicates that the market is in a bullish trend. Now, in order to enter our position, we're going to be looking for a bullish engulfing candle. And there you go. Then last but not least, for this bullish engulfing candle to be our entry candle, we need this last volume bar to be colored green, and it should also be above this white moving average. This indicates that this last candle has enough bullish volume to push the price in the direction of our trade. All our entry conditions are met on this candle, so we're going to enter a long trade right here. We're gonna set our stop loss just below this swing low. For the take profit, we're gonna set it at 2.5 times the risk. We let this trade run and take profit. Now, to enter a short trade, these are the conditions. First, we can see that the range detector identified a market range, this one right here. Next, we want the price to break and close below the range without breaking and closing above it. For that, we just let the market play out. Now, as we can see here, the range color is now red. This means that the price just broke and closed below the range. Now, for this breakout to be valid, it needs to be accompanied by significant bearish volume. To confirm that, we're going to make sure that this volume bar closed above this white moving average. After the breakout, we want a retest to happen. We, again, let the market play out and see what happens. So this is the retest of this zone. As you can see here, after several candles, price came back to retest the zone. Next, we need the retest candle to open and close below this 200 period EMA. This indicates that the market is in a bearish trend. Now, in order to enter our position, we're going to be looking for a bearish engulfing candle. And there you go. Then last but not least, for this engulfing candle to be valid, we need this last volume bar to be colored red, and it should also be above this white moving average. This indicates that this last candle has enough bearish volume in the market to push the price in the direction of our trade. All our entry conditions are met on this candle, so we're going to enter a short position right here. We're going to set our stop loss just above this swing high. For the take profit, we're going to set it at 2 times the risk. We let this trade run and take profit. In summary, the range detector automates the process of identifying ranging markets and dynamically adjusts to highlight key features including the extremities, the average values, and historical support and resistance. Traders can customize the settings of this indicator to suit their preferences and trading strategies. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.